Good afternoon, traders and investors. Will back here with another one coming to you on a Wednesday afternoon here. Another little green day in the markets here, but we did have some intersector rotation on the day, guys. Big tech pulling down ever so slightly, but the rest of the market making up for those slight losses here. So in today's video, we're going to cover two earnings reports that I felt were notable today. We're going to be covering Target and Palo Alto networks. We're also going to be going into our major indexes once again, and lastly covering our major tech stocks and see where everything stands. But as of now, guys, everything is still looking very good for the bulls. So without further ado, guys, let's get right into it. SPY up 0.21%, QQQ barely etching out a gain 0.08%, but the rest of the market doing fairly decently. If you take a look on the heat map here, you will see that some of big tech was rotating down. So Amazon, Meta, NVIDIA to the downside. Microsoft also, bit of technology slump here on the day. Oracle, Adobe, you can see this as well here. Apple still maintaining green. Tesla maintaining some good green as well. And the rest of the market fairly mixed here. So we had some good market rotation today as a whole, guys. Financials really pulling their weight as well. Love to see that. On the one-day relative, you can see fairly mixed market as well. Most of our sectors in the green here, but a little pullback here by healthcare, our laggard major sector once again, and utilities and energy. On the 1 week relative though, everything still looks very good here. So guys, before we get into more technical analysis, let's get right into our earnings, and we're going to start it off with Target. So Target here was up 17, almost 18% on the day, reporting earnings before the market opened this morning. And they had a pretty good earnings report though, but a little bit of drawbacks in the earnings call if you knew where to look for. So Target obviously coming off of our lows here, they were down to almost $100, but you can see this company has been plagued in the past couple of years here, down pretty much, they were down about 60%, now only down about 50% off the all-time highs. Target still with some struggles to address here. So what happens on the earnings call today, guys? Well, they had a very nice double beat here. So beat on EPS, very strong beat on EPS here as they were able to improve margins and reduce inventories, and a slight little beat on revenue here. So let's dive right into the call. Target shares jump more than 17% after retailer posts big earnings beat, even as sales fall again. So this is the caveat in the whole earnings report here, guys. Big box retailers said it's still seeing weaker discretionary spending and deal-hungry shoppers. So shoppers once again opting to spend only on necessities and not so much on discretionary items. Those discretionary items are where Target and a lot of other retailers make most of their money. So that is definitely a thing to look into. The company said it expects the holiday quarter to look roughly the same, with comparable sales in a range of around a mid-single-digit decline here. So declines year over year for Target. This has been plaguing them for the past year pretty much. You can see this slight little decline here on a quarterly basis. Really flat sales over the past entire year, guys, and even declining, right? They are able to protect a bit of their profit margin, but you can see profit margin very slim for Target, only 3% here, guys. And they've always had very, very, very slim profit margin. So they really tried to juice their business on maximizing revenue, but unfortunately revenue has been down here, right? So shoppers aren't buying much more than the necessities. They're hungry for lower prices. When they do make purchases, they're postponing them, such as waiting until the temperature drops to buy a pair of jeans or a sweatshirt, said the CEO here. For the second straight quarter, Target's comparable sales declined. The industry metric, also called same-store sales, takes out some of the impact of store openings, closures, and renovations. Now, Target has closed some stores, and we will get into that right away here. So this is the problem. They also guided slightly lower for Q4, saying that revenue wasn't going to improve much. And that is a problem for Target because Q4 is known to be a very good quarter for major retailers here. And into early next year, Q1 is technically the slowest quarter for retailers. So we'll see how they manage that. Now, it obviously had its challenges here. You guys know the whole thing where Target went woke and went broke. So the quote goes here. And that was the article on that here. But you can see here, guys, right? The problem of this organization here has really been plagued by theft, right? And theft has been it's been a number of earnings calls so far, namely the dollar store. And they do address it here lower on the call here, right? So we also had the reason that they were up so much, though. Let me get into the profit margins first, right? So Target's improved profits, they attributed Target's improved profits to better management of inventory and expenses rather than strong sales. Inventory levels declined 14% at the end of the quarter compared with end of year ago period when the company had lots of excess merchandise. So they've done a good job here, guys, of managing inventory better. You guys know that they had a lot of inventory surplus coming out of 2021 and 2022 because of the supply chain issues. So they onboarded hoarded a lot of inventory here, and now they've finally been able to reduce some of that inventory here, and it's going to be curious to see whether they do well during the Black Friday period, which is coming up shortly with UX Thanksgiving as well. And the other thing that plagued, however, Target is the fact that they've been dealing with excess store theft, guys, and this has been a name thing that's been plaguing not only them but a few other retailers here, guys. So until they do manage to get that under control, expect further turbulence for Target here. Now, Target, in terms of me personally, I don't really like buying this company. My favorite retailer is obviously Costco. I've mentioned that a number of times on the channel, and Walmart in a close second place. Target, unfortunately, having to deal with a bit more issues here in terms of management, cost control, inventory, and store theft. So until they get all that stuff under control, guys, I'm not really going to be buying Target, even though it is at a fairly deep discount here. You can see their profit margins are very slim. And when you compare that with somebody like Costco, who runs a membership thing, right? So Costco also runs fairly slim margins here, but you can see Costco's quarterly revenue is steadily increasing here on the year and on the quarterly basis. They are now back up to par here. So Costco is one of my favorite retailers for that reason. And even Walmart, guys, Walmart has been performing very well through turbulence here as well, increasing the revenue on an annual basis, and on a quarterly basis, maintaining somewhat flat, somewhat better margins than Target as well, but just a much more solid business in terms of the company here. Costco and Walmart obviously have a lot of international exposure that Target doesn't have. So Target is kind of locked in to that US market. They were in Canada, but they pulled out a few years back here. So really only zooming in here on the US market here. So too many negatives for Target for me, especially the fact that they did guide down for next quarter, and they plan to have somewhat of a rough 2024 as well until they get those issues under control. So that's pretty much it for Target. Not a buy for me personally. Now, let's move on to our second earnings, which is going to be Palo Alto Networks here. So this is one of our cybersecurity plays, one of the market's favorite cybersecurity plays in the entire market. You guys can see this stock has had a phenomenal journey ever since IPO, pretty much back in 2013. They are up a substantial amount, and they did a great job, guys, here of during the past 3 months when the market was falling apart, Palo Alto was really maintaining gains. But what happened in the earnings, guys? You can see that after hours, the stock dropped almost 12% to recover roughly in the $240 range. $240 range, guys, is roughly around their previous support area. So that's right where I wanted to see it potentially bottom out. That's exactly what happened. They came to the lower end of the support here, and now pretty much flattening out in the 240s. We'll see how it opens tomorrow. But what happened on their earnings, guys? Earnings was fairly good. However, they guided slightly down. Now, earnings, APS is up 19%, very, very good. And a slight beat on revenue of roughly 2% as well here, guys. So fairly decent report as a whole. I'll show you guys the numbers as a whole here. We're going to get into it. The main thing that stood out to me in the earnings quarter is this, right? So an unprecedented level of attacks is fueling strong demand in the cybersecurity market. That is very, very, very good, which is what the CEO said. We continue to execute on platformization as customers recognize the benefits we can provide in simplifying security architectures and driving better security outcomes here. So CEO was very, very positive on the whole outlook of the core of the company. Let's get into a few numbers here, and then I'll get into a few numbers of my own. So very, very good chart put together here by Brad Freeman here. He does a really good job of putting together charts after earnings as soon as they come out here. So you can see the results. They missed the billings guide, guys. So a bit of a dip in customer support, a bit of a dip in new customers here. So that is a bit of a problem. Fortinet was having the exact same problem, which we covered earlier on the channel about a week ago now, but they did beat revenue. They beat the guide. They beat the EPS, which is what we saw here. And what I did want to reiterate here, guys, is their year-over-year growth, right? So you can see the quarter-over-quarter growth was slightly slimmer, that they did diminish a bit of their revenue, and they did diminish billing significantly, right? So quarter-over-quarter growth is pretty negative. But in terms of year-over-year growth, guys, this is absolutely phenomenal for this company, right? They're still growing at revenue at a 20.5% year-over-year growth rate, right? And growing net billings here by over 15%. Very, very, very good here as a whole. And as a whole, you can also see here that their earnings before interest and taxes, right, has been steadily increasing every single quarter, every single year. So very, very good that they can really boost net income as well here, and also boost free cash flow. There was a slight dip last quarter, but they're back up to very, very good levels of free cash flow here. So this company, guys, is very well set up. Their financials are absolutely outstanding. And if you can see down here, guys, their projections for the next years are quite strong, as a matter of fact. So you can see on an annual basis through 24, 25, 26, right, we do have a net increase in EPS, which is really going to help the company boost profitability. This is a company that has just recently come into profitability here. You can see all throughout 19, 20, 21, 22, they were negative net profit margins. And now finally this year, they have started boosting net income more and more. And this is going to continue for the next couple of years, guys. So they're set up fairly well. And you can see the analyst expectations as well. Analyst expectations is for the stock price to have a significant rise here between 282 and 340. So very, very good. All analysts do stand at a buy right now. And in terms of their financials, guys, let me just show you one thing in terms of their financials, right? This company, although they were not profitable for a long time, their balance sheet is very, very strong, guys. They just concluded fiscal year 2023, and you can see here that they've been doing a great job of reducing the debt all year here, and they've really accumulated a substantial amount of free cash flow and cash-to-cash equivalent. So the company is set up well for the future. Couple that with their growth in EPS, couple that as well, excuse me, with the fact that their billings are slightly down, but they did give a good forecast here for the next year. This company should continue to perform well here. I did take a very small position here as I thought that the earnings downfall was a bit overblown here. So I got in the after hours, roughly around the 233 mark, and now we're up roughly $10 per share as it stands here. So I'll show you guys that position tomorrow. I am looking to just hold this position, only 10 shares, so about a $2,300 position here. I'll be looking to make a slight little swing trade here back up to the highs. No reason for this company to have an extended drawdown, in my opinion. I like Palo Alto Networks, but it's a bit too rich for me to throw more than that at it for the current time here. So that's pretty much it that I had for you guys on earnings today. Let's get right into our technical analysis for our major indexes, and not much has changed, guys. Not much has changed. SPY still performing very well, still in a daily uptrend. We are going to be looking for potential top out area between here, 451, and your 453 level. That is the next area of resistance, getting very close here to our 52-week highs. But now we are encountering another little level of resistance. So if we do pull back, guys, there's tons of space for the bulls to pull back. Anything above 433.60 is just going to be looking for a higher low for daily trend continuation. And the weekly is looking absolutely beautiful. If we close a week like this on Friday, it's going to be looking very good. Even if the bulls take a slight couple of weeks off in the next few weeks, that would mean weekly consolidation into a potential weekly uptrend rise, as we do know that the macro is significantly improving. So no red flags whatsoever on any time frames on the indexes here. We are just looking to slightly perhaps pull back as soon as this move pulls back. And then we're looking for the daily lower high and further continuation. So very, very good setup as long as we continue to get sector rotation from XLF and XLV when big tech takes a little break here. QQQ, same thing. QQQ now running into our 52-week high resistance right away, guys. We're right there, right? So 388 pretty much is going to be your 52-week highs. Get beyond that, guys, and we are now back to previous 52-week highs and beyond. And then it's the all-time high area, guys. We're really not that far off of all-time highs. If you take a look here, we're pretty much only about 5.5% from all-time highs. So QQQ really outperforming the rest. Big tech has been a major contributor to that. So once again, even though we are at a slight area of resistance here, we are just looking, if the markets do pull back and when they pull back, looking for the daily higher low. Tons of space. And now this green box will be acting as support. So if the markets do pull back, expect the bulls to be buying the dip in this area here as they come back into the buy zone here around the 377, 375 area. Anything above 370 is just for your daily lower high. And on the weekly, I'll remind you, weekly looking very, very, very good as well. If the bulls do take a couple weeks off and consolidate sideways into this area, perhaps just looking for that weekly lower, higher low here. And then we're going to be looking to push higher and beyond our 52-week highs if we cannot crack them in this one single move. So very, very good by big tech here. Now let's move on to financials here. XLF financials also performing very well, guys, up 0.5% on the day, continuing their rise. And now we're running in to the area of resistance, which we predicted, guys. 35 was the area to watch. And you can see bulls slowing down ever so slightly with these 2 wicks that we've had in the past couple of days. So if the bulls do decide to slightly pull back here, we are just looking for a daily higher low. Anything above 33.45, it's just going to be looking for a daily higher low for further trend continuation to the upside here. So if we cannot smash this area of resistance in one clean shot, we may have to two-step it. That's fine. The bulls are set up beautifully. Tons of space to do so here. And if we do also pull back on the weekly, same principle, right? The weekly uptrend is more than likely at this point. So any pullback is going to be looking for a weekly higher low. potentially in the 34 range, to potentially put in a weekly uptrend. And the weekly uptrend is going to take us right into our 35, high 35s, 36 area, this whole level of resistance that we've been struggling pretty much since the past year and a half at this point, right? So very good performance by XLF, nothing bad to say whatsoever. Any pullbacks here, guys, are most likely going to be buying for the bulls. Still very nice opportunities in financials still. If I can bring a couple, American Express still trading decently off its all-time high, near the bottom of a range. I like this company a lot. And Charles Schwab as well. Charles Schwab, very, very well set up here. Insane profit margins for Charles Schwab, as you can see here on an annual and quarterly basis here. They're set up very, very well for the future as well. So we will see if they can pull out of this area, but we are currently still in the buy zone for me on Charles Schwab. So great performance by financials here. Now let's move on to healthcare. Healthcare has been lagging ever so slightly behind the rest of the market, and today was the same here, almost flat on the day. We are going to need a break of 128.91, guys. This area is absolutely crucial. This is the only major index that has not set the daily uptrend yet. So what will be the potential indicators here? Well, if the rest of the market continues to consolidate, we may end up getting a tightening range on XLV, sorry. That's fine because we are above our moving averages, as you can see right now. We are above our area of consolidation. This support zone, 127 down to 125, is the liftoff zone. It's been the liftoff zone every single time we seem to pull into this zone here. The markets react very, very beautifully in terms of demand, and we tend to buy it up. So even if we do consolidate sideways into this zone while the rest of the market pulls back, well, we are just going to be looking for a tightening range and eventually a break of this 128.95. I need to see a break of this area really consolidate the daily uptrend and really give it to us, because this is the only sector that hasn't proven it to us so far. And on the weekly as well, still just looking for that weekly uptrend shift too. So healthcare still with a bit of work to do. Now, IWM Russell was performing very well on the morning here, but you can see they pulled back. They were actually up, give me a second here, they were actually up almost 2% on the day, but now pulling back, ending only 0.17%. So bulls potentially getting a little bit tired near the tops here, needing to pull back ever so slightly. The RSI was more than overbought here, so that is perfectly normal here. We will give them a little breather. They did a great job here, pulling up into the 182 here today. And you can see, guys, on the chart, this 182 area was a very big area of support in the past. So it's normal that now it is acting as a bit of resistance, downward pressure by the bulls. And the 200-day moving average was right here as well. So normal that the bulls encounter a bit of resistance. But bulls are set up good, tons of space here. Any pullback is just going to be looking for the daily higher low for further continuation on the daily trend here. And 174.50 is going to be the area that we most likely look at, area of resistance in the past here. So if we do pull back, look for that area to be acting as support, potentially before another leg up. And on the weekly, guys, the bulls are shaping up very, very nicely for this bounce, right? Any single weekly pullback potentially over the next 2 weeks will just be for a weekly higher low for a weekly trend change. No weekly trend on IWM here since pretty much the month of June. So curious to see if the bulls can set that. So bulls doing very, very good across all major sectors here. No real red flags except for healthcare that's lagging a bit behind. Dow Jones now. Dow Jones also performing very, very good today. I liked Dow Jones today. 0.5% to the upside, now coming in to this area of resistance, right? The 35,000 was the area that we're watching, and we are now here, slightly under it. So we will see if the bulls are able to power through in one clean shot, come back and sit on this area for the daily higher low, or if we get rejected right away, need to consolidate a bit before a second attempt. But any pullback is going to be for a daily higher low at this point for the daily trend continuation. Bulls looking very, very healthy. Nothing bad to say whatsoever. And we do have very good support down here in the lower, in the 34,500 range. You have your moving averages here. You have this green box, which is previous support, and then was resistance, right? And this was an area of consolidation. So it would be likely that if we do pull back, we're going to be pulling back into there before a daily uptrend continuation here. And on the weekly, once again, if the weekly does pull back over the next couple of weeks here, tons of space for the bulls to set the weekly uptrend. No weekly uptrend here since the month of May and June here on Dow Jones. So curious to see, can the bulls set that in one clean shot? So very, very good across all of our major indexes here. Great to see some rotation, and there are still a few value names that are at deep discounts in my opinion here. So now let's get down to major tech. All right, so getting into major tech, guys, let's get into Apple right away here. So Apple pulling back on the day here. They were up all the way to 189, almost at our 190. 190 was the area we're looking at. This was your previous resistance area. So normal that the bulls encounter a bit of resistance on today's candle here, up only 0.3%. Any pullback on Apple, I'll remind you, is just going to be for a daily higher low. Tons and tons of space for Apple bulls to set that daily higher low for a potential move to the upside continuation after that, right? Very, very beautiful chart on Apple here. Tremendous gains since pretty much before earnings here. Love to see this on Apple. Bulls are set up very, very healthy for the daily trend change when they make that happen. And they're also set up beautifully for the weekly trend change. As soon as we get a little bit, let's say we set a daily downtrend here for some which reason and pull back in the lower 180s, well, you're just going to be looking for weekly consolidation into a weekly uptrend into the end of the year. So Apple looking very, very, very phenomenal at this point. Ran a bit too much, bit too high for me right now, but if we do pull back in the lower 180s, I will definitely be looking to shop for some Apple in the lower 180s. Very, very good performance here. Now, AMD pulling back slightly on the day, 1.5% to the downside. They were almost down 2% on the day, but bulls able to protect a few of those gains. Same situation as Apple, really, guys. Just looking for the daily higher low eventually, right? So AMD has tons of space to give back here for the daily higher low. Anything above 93 is just going to be for a daily higher low for further trend continuation. So look to this area right here. I've been saying it for a couple of days, right? The 111, 112 area is going to be absolutely crucial for AMD. If we do pull back, I do think that's an area that we are going to be likely heading into here. So if we do set the daily downtrend in this area, watch the 113 down to 111 area for likely consolidation here. And on the weekly, same thing. If the weekly pulls back next week, potentially look for the weekly consolidation 113, 112, 111 here for the weekly pullback here into potentially weekly trend change here for the bulls here. Going to be very, very juicy to get that weekly uptrend in motion here into the end of the year. AMD set up beautifully. Any dip to these lower levels will be a buying opportunity in my opinion. Now over to Amazon. Amazon performing somewhat negatively today, but as you can see, pretty much inside yesterday's trading with the gap up here. So Amazon still performing very, very well. We have the daily uptrend here, guys. So if any consolidation, we're just looking for a higher low above 139.86. The bears are pulling back hard into it. So if we get a daily downtrend, guys, no big deal. We're just looking for a weekly consolidation move into a weekly trend change to the bulls here. So potentially shaping up for some daily consolidation into weekly consolidation on a lot of these. But what I want to show you guys is that the bulls have so much space on the weekly here that any move down, any 1 or 2 week extended move down here or sideways will be a dip buying opportunity for your bulls to push it excessively higher here into the end of the year. No red flags on Amazon as a company as a whole. So if Amazon does trend down here, I will be looking to potentially write options. 136, 135 would be a very good sweet spot for me. If we do get some of that weekly consolidation into this space right here, I will definitely be looking to pick some up to eventually ride it higher, potentially into the 150. So very, very good chart by Amazon here. Daily bulls, weekly bulls in full control. Now let's move down to Google. So Google also performing very well on the day, 0.7% to the upside here. Google closing in on this gap fill. 139 is pretty much going to be that area to watch. 138.50 actually, and we're kind of almost there. So now the Google bulls have recaptured a lot of this move, guys, almost over 80% of the entire move down. And this sets us up very nicely for the daily trend change. So any pullback here is going to be set up for a daily trend change to the bulls here. Watch your moving averages. This whole area of consolidation is likely where we do pull back if we pull back from here. So 133, 132, watch for that. If we do pull back in this area, I will be looking to 131, 130 area to be writing some options in. I like Google because Google is most likely going to be able to set up for the weekly trend change into the end of the year as well. So I will be buying all dips on Google too, now healthily above our moving averages. And Google still with a lot of space to move here. Actually, the daily time frame is nowhere near overbought. We're almost close to that gap, but we're going to be running into this whole area of resistance around 138, 139, right? So keep that in mind. If the bulls do pull back, we are just looking to pretty much buy the dips and ride into the end of the year. Q4 should be a very good quarter for Google. Now moving into Meta. Meta pulling back on the day, 1% to the downside here, but that's okay after running so much, guys, and hitting new 52-week highs. Normal that Meta has a bit of space to pull back into, right? So still looking for the daily higher low here. And if we do potentially pull back on the daily for some days here, well, your weekly is just going to be for a weekly pullback, set the weekly higher low and move to the upside. Same thing that Meta does all the time. Did it right here again, right? Bit of sideways action, right? And then move higher, sideways action, move higher, sideways action, move higher. So just looking for some potential sideways action into your previous support zone 320, 325-ish, and for the potential move higher into the end of the year. Q4 is supposed to be the best quarter for advertisers, so Meta should have a very good time here leading into Q4. So any move down into daily consolidation for a daily higher low for the daily trend change, look towards the 320 area. That would be the most likely area that the bulls would pull back into, in my opinion here, but no red flags on Meta. Bulls in full control. And now Microsoft, same thing. Bulls looking a bit tired here, consolidating at the top. Not giving back too much though, almost flat on the day, 0.16% to the downside here. Any move down on Microsoft is for the daily higher low and to move to the upside here. So Microsoft's chart looking very, very bullish. And even on the weekly, guys, if we do take a week or two off, no problem at all. Bulls are set up very, very beautifully here. Anything above 325 is just looking for the weekly higher low here. Could come down and sit on our previous all-time high support here of 355 and for the potential rise higher. Microsoft Bulls in full control of everything. Monthly breakout is confirmed at this point. We'll see how November closes. The weekly breakout is more than confirmed and daily bulls are in massive control here. So take an eye if we do start dipping. Keep an eye, guys, on the mid 350 area. That would be a likely area where I can see Microsoft pulling back into. Now moving on to NVIDIA. NVIDIA, big day next Tuesday is going to be earnings for NVIDIA, and they're very close to their all-time highs. So I'd like to see bulls protect as much as these gains as possible here. The area that I don't want them to get to below is 450. You need to hold 450 before next earnings here. Give them the best chance here and give them the best cushion. Need to stay as far away as possible from this 404. If ever earnings does come down ever so slightly or is not what people are expecting, we currently have a nice 17.5% cushion. So looking for the bulls to protect that in all cases here. So any pullback on NVIDIA, let's say we do get a couple more days of pullback here, we are just looking for a daily higher low. Expect this previous area here, 470, to play some big support, and you have your moving averages down here, but all in all, no red flags on NVIDIA as per yet. Earnings next Tuesday is going to be crucial. And also on the weekly, guys, if the weekly does pull back, let's say earnings is bad, just looking for the weekly higher low for further weekly uptrend continuation here. Anything above your low here of pretty much 392 is looking for the weekly higher low here. So very, very good performance by NVIDIA, even though they were down today. Really done a great job here of moving to the upside and protecting those gains before earnings here. That is exactly what I want to see. And now our three last ones, Tesla. Tesla doing a very good job here today, up another 2.29%. They got almost as high as 247 here today, guys. So very, very good daily uptrend continuation here. Any pullback once this move is topped out, we've now covered the earnings gap. So any move down is going to be looking for the daily higher low. Expect them to come back in this area. If they do 230, 229, this whole little gap area, and all the moving averages are down there. So it's going to be tough for the bears to break below that. If we do consolidate from this point, just look for the daily higher low, further daily trend continuation here. I'd like to see this daily trend get as high pretty much as 260. Get me as high as 260, guys. And you really start erasing most of this most recent leg down, set up for the weekly trend change here, potentially into the month of December here. So great movement by Tesla here. Tesla bulls just looking to push this daily uptrend as high as possible. And as soon as they stop, we are going to measure the size of the weekly move and see if the bulls have enough for the weekly trend change. But as of now, it's looking fairly good. You put the fib on this, guys, and they've come up pretty much over 61%, 62% of the downwards move. So the probabilities now do favor the bulls for a weekly trend change here into the end of the year. Just need to be patient as that takes a little bit of a while to reverse here. So very good price action on Tesla. Any dips here into the lower 230s, I will be looking to write some puts in the 220 range. And now the two last ones, Palantir and PayPal. Palantir doing a great job here of protecting gains as well, still above $20 or still roughly around $20 here. We did hit a new 52-week high, guys, today. We smashed our previous high by about 20 cents, right? The high on the day today is pretty much 20.41 or 20.37. Very, very good move by Palantir. Any move down consolidation is going to be for a higher low, anything above 1810. Bulls just looking to continue the uptrend here. Palantir has been very, very popular amongst retail and institutions ever since they started posting profitable quarters, and I expect that to continue. And also on the weekly, bulls looking very healthy, guys. Any extended pullback for a week or two, not going to hurt the bulls in the slightest. So much space above 1450 to set the weekly higher low for further upside here. We'll be really curious to see how they close the month of November. We are looking for the first monthly uptrend on Palantir, so keep that in mind. As of now, no red flags whatsoever. Just a bit high for me to be buying right now here. Going to be waiting for some dips to write some options, maybe in the $17, $18 range here. Would not mind picking up a bit more Palantir here prior to the S&P 500 inclusion. And now lastly, PayPal. PayPal performing very good today, guys, up almost 3%, continuing the daily uptrend. So yesterday's video, I was telling you this is not enough. Now the push is real, right? So we do have a nice confirmed daily uptrend. First daily uptrend since the month of August. Keep that in mind. So very, very healthy movement by the bulls here. I would like to see them get as high as around $60 and start really clearing this area, this really area of chop, right? So this is going to be a nice area of resistance for PayPal right now. We'll see if they can blast through this. I'd like to see them get through this here in one shot and then come sit on it it and continue the daily uptrend that way. But now if we do get a pullback, guys, any pullback above 53.61 is just going to be for a daily higher low for further daily uptrend continuation here. Looking good, but as I said on the weekly as well, the weekly you really need to get as high as possible to 65.21. Get me as high as possible to 65.21 and we can start talking about potential weekly trend change here, just like they did back here. As of now, they haven't taken back too much of the move. They've only taken back pretty much 50% of the move, so not enough for me to pronounce myself on the weekly trend change yet. Need to see a bit more action by the bulls. We'll see if they can get that done in the next few days, but very good performance by PayPal if I do say so myself. That's pretty much everything that I had for today's video, guys. Tomorrow we'll do the portfolio recap for the week. So I hope you enjoyed today's video, guys. If you did, consider dropping a like on the video. Really appreciate it. Appreciate all of you who have subscribed. If you're new to the channel, subscribe to the channel as well. We do these videos pretty much every single day after the close. Hope you enjoy them. And as always, if you have any questions, feel free to ask down below in the comments. Stocks, macro, options, I got you guys. I'll get back to you within the first 24 hours. So take care, guys. See you tomorrow after the close. Peace.